Welcome to Asia Climate Capital. In each podcast, we discuss the current and future business and finance trends related to the energy transition in Asia. By the way, feedback is really important to make the content useful and relevant to you as well as other listeners. So please send us your thoughts, questions, ideas for future topics, and also please like this podcast in whatever podcast app you use. Welcome to the Asia Climate Capital podcast. This is the very first episode. I'm your host, Joseph Jacobelli. So today is a little bit of a audio blog, and the focus is going to be talking about the energy transition and some of the kind of key drivers of what's happening in Asia and what will happen over the next 30 years. And at the same time, also discuss the climate capital for climate financial solutions side of things as well. So first, let's talk about what actually I think that the energy transition is. I think that the energy transition is something extremely complex, which has a multitude of dimensions, and I would define it as a complex kaleidoscope of economic, environmental, financial, fiscal, legal, political, regulatory, social, taxological, technical, and technological intertwined challenges with an overwhelming pressure for low prices and for the lights to stay on. So really a multidisciplinary approach is absolutely imperative for any net zero strategy, both at the government level or at the corporate level. So if we dissect that very quickly, so the different dimensions need to be understood. So when you look at and the energy transition and clean energy investment opportunities in the region, you really have to look at a variety of aspects, because the energy value chain is not as simple as with fossil fuels. And at the same time, a lot of the countries around the region are very, very sensitive to energy prices. So that means, in real terms, that if the government or the utility tries to put up the electricity price of an end user, especially residential households, it will have a very, very, very hard time. So the cost of the energy is absolutely key. And secondly, just like in any country, at the end of the day, the reliability of energy supply is extremely key. And that's why I was saying that there's an enormous amount of pressure for the lights to stay on. So that's the definition of what we're talking about. Now, in a book that I wrote back in 2021 called Asia's Energy Revolution, China's Role and New Opportunities as Markets Transform and Digitalize, I was really talking about two key fundamentals and two transformations. The fundamentals are A, a huge energy consumption rise, and B, the liberalization of markets is growing in terms of the different markets, different jurisdictions around the region. And then there's two transformations which importantly are happening concurrently. One is the decarbonization, and two is the energy digital technologies and solutions investments. And all of this, almost you could call it the base of all of this, is climate finance. If you don't have the money, then you won't be able to address the high energy consumption, decarbonization, and all the rest, obviously. So if we look about these four elements, these two fundamentals and two transformations very quickly, on the growth side, there's going to be a massive energy consumption increase around the region, which we are already witnessing. One key number out here in this region is the fact that about 11% of electricity consumption comes from developed Asia. That's the Japans, the Hong Kongs, the Australias of this world. And then 89% of the power generated is actually from developing Asia. Now, if you were to very, very simply assume that 30 years from now, the bulk of these developing countries are going to have a consumption per capita, and I know that's a very, very basic metric to look at, but just hypothetically, so if all these developing countries are going to have, or most of the developing countries are going to have a megawatt hour consumption per capita roughly the same as those as the developed economies, then the growth is absolutely exponential. In some places like China, demand for energy will grow at least twofold, if not threefold, or potentially higher, depending on electrification. And in other places like some of the frontier markets like Sri Lanka, for example, it could grow as much as 17, 18-fold. So the growth rates are absolutely outstanding. Now, there are two elements which we should talk about. One is an element which could cap potential growth, and that's governments getting their heads around energy efficiency kind of measures. But so far, we must say that in my experience over the last looking at the electricity markets out here for the last 32 years, governments in general have not been very successful. So will that change over the next 30 years? Possibly. But I will not bet all my money on it right now. And then there's a factor which is an upside, so the growth could be even higher than expected for now, and that's electrification. And when we're talking about electrification, it's not just limited to switching from internal combustion engine vehicles to electric vehicles, but also the electrification of the railroads and other mobility or transport related electrification measures. So those are two factors which we also have to take into consideration. So that was the first fundamental, the massive energy consumption increase. The second one is about the decarbonization, i.e. going from brown to green energy. And here we've seen that Asia, on a combined basis, especially because of China, of course, has seen some astronomical numbers. And if you just look at solar, you've got something like 255 gigawatts in China, another 40 or so in India, as much as 70 in Japan, and you put those together, and basically, what Europe has done and what the US has done, even on a combined basis, really pales compared to Asia. And of course, the secret formula here is, number one, China is the global clean energy technologies leader, especially in terms of installation. And secondly, the other factor is, of course, that the Asia-Pacific region as a whole accounts for about 50% of the global energy consumption. So obviously we expect much bigger numbers out in this region. So the second fundamental factor was the growing number of liberalized markets. And if you look at how many markets are already open today as we speak, in terms of being liberalized, i.e. open to competition, so where the end user basically has a choice in terms of his or her energy provider. We already got on board to different extents, of course, Australia, China, Japan, New Zealand, Philippines, and Singapore. In terms of jurisdictions which are looking at doing it, but it's still on the drawing board, so to speak, you've got Indonesia, Malaysia, South Korea, Taiwan, Thailand, and another power market, Vietnam. So you've only got about 4 countries in the region which are really frontier economies or are being very laid back in terms of liberalization that remain. And those are Bangladesh, Myanmar, Sri Lanka, and then the Hong Kong Special Administrative Zone of China. Now let's talk about the twin transitions. One is the decarbonization from brown to green, and the other one is this digital technologies and solutions. On the decarbonization front, if we just look at one of the many, many forecasts out there, and that's from the IEA, the IEA basically expects that the compound annual growth rate of electric power demand in the region, generation in the region, between 2020 and 2050, so the next 30 years, is going to range between 2.2% and 2.8%. That's 2.2% and 2.8%, rounding it up, call it 2 to 3%. And for renewables, the growth rate expected is actually 5.4% to 7.1%, so 5 to 7% roughly. And so that's going to be, quite a pace faster than actually the total electricity demand. And that's going to result in renewables accounting for anywhere between 60% to 80% of total electric power generation by 2050. That's 60% to 80%. Now, personally, I think it's going to be at the higher end for reasons that we'll discuss later, as well as in other episodes. And the second transition, so we have from brown to green, and the second transition is the boom in digital solutions and technologies, digital technologies and digital solutions for energy. So when we look at that, for those of you who are familiar on how grids interact with renewable energy facilities and projects, you'll know that actually it requires quite a bit of sophistication in terms of the digital technologies and solutions. At the same time, and we call these, at the operational level, we call these in front of the meter digital technologies and solutions. And at the market level, i.e. The user level, we call them behind the meter. And the investments in these are growing exponentially as we speak, together with these investments in decarbonization. So now we move to the kind of finance side of things. And what's true for Asia is actually pretty much true for the whole world. So in my opinion, capital markets are moving towards becoming green, so green capital markets. And what I mean by that is, look at bonds, for example, seen a humongous growth in bonds, in green bonds. And at the end of the day, green bonds are bonds, but they're bonds with very clear parameters in terms of the usage of the funds raised, and they have to go towards green and sustainable solutions for the green bonds, at least. So, these traditional products, traditional tools, including actually something as simple as commercial bank lending, they're becoming green, and that's why banks now call it, green lending. And the global action in the financial sector towards, labeling capital, climate capital, ESG capital, green capital, impact capital, responsible capital, sustainable capital, SDG capital, and the same wording with investments, i.e., climate investing, responsible investing, etc. The labeling of this is increasing very, very, very dramatically globally. And I don't think that the momentum is going to change in the short term. Recently, a McKinsey study came up with a number which is that globally we will be spending around about $275 trillion US dollars on the energy transition, and that's globally. And given that Asia accounts for 50% of total demand, and given that 89% of that demand is in developing Asia, you would expect that a big chunk of that is going to take place out here. So where is the money going to come from? Well, the first one, of course, is governments. Governments have some reluctantly, some aggressively committed to supporting the energy transition in putting in some some policies and guidance to facilitate investments into renewable energy in a variety of ways. And then apart from that, you've got private capital, and then you've got the kind of open markets, i.e. equities and credit, and then you've got the bank lending. Now, in the private capital, you've seen, if you look at the news flow, at least over the last 12 months, it's increasingly evident that apart from Europe, the other continent that people talk about when they talk about private capital dedicated towards the energy transition or decarbonization or green investments, etc., is really Asia. Asia has become, the markets have realized that Asia is really a global center of opportunities. And we've seen Asia dedicated private equity and venture capital really surging over the past few months, if not longer. The second one is, as I mentioned, the markets, and that's really equities and credits. And what's happening on that front, and what will continue to happen, is you've got number one, companies in the energy business spinning off their green and sustainable kind of arm, so the renewable arms. Then you've got some private firms listings, and then you also got some new corporates, some new creations. So that's going to be sources of capital towards the energy transition. And of course, you've got Asian green. Apart from the Asian green IPOs, you also got a very sharp rise in Asian green bond paper, as well as sustainability linked bond paper as well. Then, last but not least, bank lending. Banks in Asia are joining the global efforts for net zero emissions portfolio. These banks looking at some net zero emissions or neutrality by 2050, if not earlier. So Asian banks' commitments is growing, but to be honest, it's been lagging. But I personally expect an increase in announcements from Asian banks, including Chinese banks, that they're going to be increasing their green lending. So last but not least, let's talk about corporates, which is really one of the key drivers. So obviously, you've got government enabling policy, etc. Then you've got corporates, and corporates are increasingly learning a few things. Number one, that they need to make some kind of authentic commitment to make the business more sustainable. And what I mean by authentic, they've got to avoid any kind of possibility of people think that they're just doing greenwashing. Secondly, the strategies must include how to address material ESG risks or climate risks, which is increasingly gaining momentum globally, but also in Asia as well. Thirdly, I think that at the end of the day, at the corporate level, it is at the board level that this must be managed and driven. And last but not least, it must be very clearly communicated to stakeholders and shareholders. And one important thing here, of course, would be that the corporations have to very, very clearly articulate the real world impact of what they're doing. Otherwise, it becomes greenwashing, and that will affect their short-term and long-term capital raising. And we've seen some companies, even financial institutions, which have been caught out, and whose share price or bond price significantly fell. So that's it for me for this very first episode. This kind of summary of what's going on in terms of the energy transition in the region, some of the key drivers. So again, thank you for listening, and please do send through any feedback, any thoughts, any questions, any comments, as well as any ideas for future topics that I can cover myself or with an expert guest. Thank you again.